Monday, June 26th, market analysis, Stan Ehrlich, 10 o'clock California time. I always start out with the stock market indexes and the S&P 500 spider, specifically SPY. I've talked about this downside correction, small dip, whatever you want to call it. It's not very big, happening starting over a week ago, and so far so good. But I do have to point out it's coming down very slowly and very much like a stair-stepping situation. Let's look a little closer at the last few days here. Only one day up, which was the overbought condition mostly that I warned you that this would be likely. I thought it would happen a little faster than this. So that bothers me a tiny bit. Plus the fact that, hey, where are we right now? We're at the very beginning of a support area that I've had on this chart for many months. And that implies that the market is about to turn back up again. And it could a little bit for a day or two, and then just as long as it doesn't go very far, and turn right back down again into this support area. I do expect the low of this break coming is going to be about 10 points lower than we are right now. In fact, almost exactly 10 points lower. 423, let's call it. And we're 32 and a half. So not that far out of reach now. It would be a very large down day if we had it all in one day, but it may be over 2 or 3 days on a little bit of bad news. Would not surprise me a damn bit. What I'd love to see is the RSI currently doing nothing, very neutral at the moment, 50, give or take, nosedive into the 25 or lower level and into the gap closure, 10 points lower, and probably through the top and down to the bottom of the support area, not below the support area, but it's an area where that gap is going to get filled. It seems to be a good fit if we can do it relatively quickly. Next chart is the DIA, and that is very similar. Overbought condition recently, up against historical highs, and I mean way back in December, previous highs, didn't make new highs. Overbought, stalled out, and deserved to have some sort of correction. And we have a gap down on the second day down on this dip, which I think in DIA is going to come down to 332, maybe 1020, 3310, 220, and close a gap and be around the bottom of a support area, maybe even a hair below. But again, RSI is very important to me, of course. And if it gets down into oversold territory and a hard, fast dip of 2 or 3 days, excellent. That's exactly what I would be thinking could happen. Let's go to the QQQs. And I'm talking about the gaps that we have below the market that occurred a couple of weeks ago now. And sure enough, the QQQs have a gap to close as well. And for that index, 333, say 0.20, would do the job. And it would be coming back to some historical support lines I've drawn in. And no surprise that the dip could be that much, but I think the QQQs are the one index that stands a chance of not coming all the way down here. It seems to me like a fairly significant break, and the timing might be off on the Qs relative to the S&P and DIA. So maybe this one won't quite close the gap. Now, what if it does it and pulls the S&P and DIA even further down than I'm expecting, and then everything starts to come back? Well, we'll see what happens. I don't expect that necessarily. The Russell 2000 has been in the news lately, so to speak, with me anyway. And after stopping absolutely classically in a historical resistance area and price levels had a bearish ER sell signal on top of this break to the day, and within 1 and 2 days afterwards, you could have easily sold short at really good prices, relatively close to the high of the reversal day, which is higher than my red dot. But nevertheless, on the second day, any short sale at my price was a profit, then a profit, then a profit, then a profit, then a profit. Now we have a very slightly higher day today. Finally, RSI is not oversold yet, but the closest of the 4 indexes I'm talking about. And there's a damn gap to close from a couple, 3 weeks ago. Fair enough, all 4 indexes have the same approximate number of weeks ago gap on the upside, and we're on the way down to close them, I think. Futures. And then, by the way, all indexes to new high ground completely. Futures. We start out with the E-mini, which of course is the S&P 500, same thing basically, except for trading hours creates slightly different signals on the E-mini or the micro mini, whatever, ES, as opposed to the SPY because of the different trading hours. So you may not see as many gaps, for example, on the spider, on the E-mini as you will on the SPY. Anyway, we're coming down from a historical high and a overbought condition for a few days, and a very healthy, significant overbought level at that, the highest in, it looks like, over a year. That's a profound statement to make. You don't see, obviously, overbought conditions but once a year. So taking with a grain of salt, everything I've said before still stands, but I do realize there are a few minor things that look like this could be a little bit more bearish than I'm thinking it might be. So let's stay with the gap closure concept, which is not a gap on the E-mini. Okay, next, bonds. Here we go, ladies and gentlemen. This is a higher high for about 2 or 3 weeks and almost a new high for a couple of weeks more than that, and then starting to get into another resistance area. That would be at 129 and 2/3 or something. And at that point, it's changes the ball game a little bit. Now you've got a decent support area below the market, and I think that's going to happen pretty soon this week. Then you're going to have a support line that's been extremely good, bullish trend line going back pretty darn good, October of last year, holding remarkably well recently and pushing the market into the next zone of resistance, which is the last major zone of resistance. If we can get through that, and I've talked about this for a long time, 135 on a closing basis, and you can add one more day above 135, but that's not necessarily for me. Some people do like 2 closes or more above a resistance area or breaking something important on a chart. So I think that's going to happen soon as well. 10-year notes are about the same, except that we didn't quite get down to the bullish trend line, and we didn't quite get as low as far as testing support is concerned, but it's in the same realm conversational wise, and we need to get a little stronger, a little quicker in order to get to the beginning of that resistance zone I talked about, and then through 118 on a closing basis was going to be a major long-term bullish breakout, just like bonds, and they probably happen on the same day. Next, energy markets are starting with crude getting closer to that support area. We hammered away close to some support yesterday and coming back up slightly today, but the longer-term trend is obviously down. We have periodic new lows, like a stair-stepping down market. This is a classic bear market situation. So after a while of goofing around, which we have been for a while, it would appear likely that we're going to go plunk all of a sudden and drop below 65 soon. Next, heating oil is also essentially the same story. It's already done the plunk, but it didn't last much. It still was support and is support. Therefore, the yellow big dashed line here is obviously the major support area. Closing below that, and that's 2.13-ish, is going to be very, very bearish long term. That's going to be good news. Next, natural gas. We had a sell signal a few days ago. It only worked for like 1 day or a half day, and then it turned around on us. So you may have lost a little on that. You might have made a little, depending upon your trading style. Again, the signal was only good for about a day, and that's not good enough for me. We're back up to some resistance, though, and we're turning yellow. That is overbought conditions again, including about a week of 2 overbought conditions and a bearish engulfing that didn't work. But I do keep mentioning, guys and gals, that we have these signals cluster sometimes. And I mean within a month, it might be less than that. You see two of them, maybe three. Occasionally, I've actually seen four, and the market did turn around, whether they're green or red. But it was telling us that the market was in the process of, and I didn't pick the exact day so far. I hope I do, but not always. Let's look at a little history here. Good. We have a great low buy signal right there on heating oil, natural gas. Sorry. Next chart is gold and then silver, platinum, copper. So bullish engulfing on Friday. I pointed that out to everybody. We have come down into the proximity with the middle of the range of Friday signal. We are long ER1 from Friday and also ER3 from today. And now the important level is those yellow dots. We're stopped out of everything if that happens. But depending upon your trading style, again, scalping or intermediate trading, that protective sell stop may have jumped quickly enough to actually have taken a small profit. I doubt it. Probably not. We have a break even to a small loss at the moment. On a brand new today, new long in gold. Next, silver. Oversold the last couple of days, so it deserves a bounce, but no signal per se, buy signal per se. I can only tell you that I think the rally might be up to about 24 and a quarter, give or take a half or a quarter. This could develop into something much more interesting in the couple of months to come if it continues to develop a sideways trading range, because we already had one over here, and then you have that new high double top, which was great. I won't go into elaborate on that. I've done that too many weeks. So next chart is platinum, oversold again at support very nicely, bouncing off of the lows in February, which is the bullish engulfing at the bottom of the move. And just before that, at the top of the move, we have a top sell signal. Three good ones before that, and not a bad buy. Okay, that one's got a nice track record. Next is high-grade copper. Bear move at the moment. Good for this year so far. Major cluster of overbought conditions for a couple, 3 weeks, which is a little unusual for that amount of time. Nevertheless, it topped out and started this longer-term bear move. A couple of buy signals that did not work. And I think we're going to see the test of the lows here, 3.5 and lower, and probably in the next week or two. Next, soybeans start off the grains, and beans are in new high ground today, but not holding it very well, and are overbought for several days. This is a minor high. I don't like markets that poke their nose into overbought conditions while they're yellow in the first place, having been yellow for several days before that in the second place, and not staying in that new high ground. Oxygen momentarily is too thin up there probably, and it's going to come down for a little correction. Excuse me, how far? Well, probably 1440, maybe even lower than that. That's not very far away. Next chart. So I'm a little short-term bearish on soybeans. Bean oil did get overbought, has had a minor correction for a couple of days, and is coming up to challenge those highs. And a fairly decent support level, resistance level. Nothing fabulous about it, but so maybe it'll turn back down one more time before it goes up with everything else. Don't know. Meal, kind of the same story, but it's probably still on the way down. We haven't got any higher highs and no follow through, anything to speak of. Doji, and looking for a test of these two lows we saw recently, a little minor double bottom. Corn, overbought substantially, topped out substantially. Today's low is a new low since then, but we're currently higher in the day. And we are kind of bouncing off that old bear trend line in corn. That was a decent bear trend line for quite a while. Since we have, for a couple of months now, higher lows after a lower low that didn't stay there in oversold condition for very long, and then new highs for a longer time period, I think we're going to attack these highs. I think things are turned up, and I think we're going to see a really important set of new highs, 674 and higher, and that's soon. Next, wheat. Bumped right against that red resistance level, 746-ish. and turned around. We are now lower on the day. We've been overbought already for several days, and I'm looking for a downside correction. So overbought at resistance, starting to slip a little bit. Here we come. Downside correction, I think, is starting next. Live cattle topped out with a red bearish ER sell signal and another good one about a week later. So far, so. We've got some profits. Markets popped up for a couple of days, 3-4 days. No significant follow through. I can't think anything else but new lows in the next 2 or 3, 4 days. So I expect it to come down to for a minimum objective of 164. Next is live hogs. Bearish engulfing just on Thursday of last week. We sold it short Friday, closed with a profit. You could have sold it short today at the red dots if you hadn't already on Friday, gotten the same price. Or a little bit better, it came closer to our fail-safe yellow protective stop level, which is 93.85. And it's a little higher in the day at the moment. I'd love to see it close lower on the day. That'd be great. That'd be somewhat of a reversal. Then I think it would be likely to be seeing new lows very, very quickly tomorrow. In the meantime, I wouldn't be surprised to see new lows tomorrow. I can't say anything wrong about this. It's just not working quite right yet. But that you can always say the day before it does. I'm an optimist. Next chart. OJ, support levels are holding. The lows are higher and higher and higher. So there are no significant lower lows over any major amount of period of time. On the other hand, the highs are higher and higher and higher. This is obviously the definition of a bull trend, longer term as well. Looking for a test of recent highs, which were overbought. Lately, we didn't quite get to oversold, but damn close. And here we are trying to make new highs, not holding all that well. Maybe a little more sideways, but I'm looking for it to start to move up and stay that way. Next, cocoa, overbought. We did make today a new high for the move up, and we're not overbought yet. We do have some elbow room for another set of new highs. I don't know how much, just bullish next. But here we go. There's a chance that cotton can be starting to wake up. But we're oversold at a support area in general, and a pretty good one. So, gosh, what can I say? The darn thing's going to go back up into the same sideways trading range it's been in since October. That's it. Next. Sugar to sweet. No, oh, this is even better. I just drew these lines in an hour or two ago, and you can see that we have a double top now. I've been talking about that possibility for about 4 days since the damn high of the shoulder. Well, I meant the second high of the double top. This is very much like silver, except we're not getting the red bearish engulfings, unfortunately, on the two highs that we did get in silver. Looks like that one was very close, but not quite. Anyway, double top formation. We're breaking out of it to the downside today, in progress in the last hour or so, as a matter of fact. And we are testing a bull trend line. I think it might even drop even further below that trend line. Should be hitting a lot of sell stops. This is the breakout day to the downside. It needs to stay down here, and it needs to get back up to, and might get back up to that blue level line, which is the depth, by the way, of this double top, and therefore creating the downside objective of 21.75. That is my downside objective for sugar. And what is it going to take? 1 to 2 weeks. But there's no other reason for it to stop there. Here's the major support at, say, 20.5, and even lower than that, down to 18. So I think there's a good chance that we could start getting down to 20.5. But my first objective, again, is 21.75. Next chart is back to the E-mini. That's it. Have a great day. Talk to you tomorrow.